Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 8th COT report in 2015, and as usual we're going to start off with the changes in commercials positions. So here we go. As you may see, we've got S&P 500 on top of a list with 30% change in commercials positions, 32 in large speculators. This change size is definitely larger than average. We do see greater changes in the past. It is a bullish COT change signal, and that's about it, what we can talk about right now. But moving on to the 5 years chart, having a wider perspective of the market, we can analyze the extreme situation in the COT report. You may see that we are actually moving away from bearish extreme levels at the moment. At the time we had this bearish extreme, you may see, I'm just showing you right now, we had a bit of a decline in prices, but nothing extraordinary. And again, we're back in rally mode right now. So from the extreme side of the signal, we're not really receiving anything large or obvious signal. The COT change signal is telling us that we may see even greater prices in the near term. That may actually happen. But I would say let's move on and have a look at the cocoa market, where we have a 26% change in commercials positions. We may see a little bit more action over there. We have a bearish COT change signal, as you may see. Small speculators have changed their positions more rapidly, 29% change over there in their positions. This, of course, is a bearish COT change signal. And moving on to the 5 years chart, you may see how extreme this market is becoming. We are actually moving away from a relative bullish extreme, definitely not an unusually large so-called all-time extreme situation. And on the wider perspective, you may see that we are actually moving away from bearish extreme levels. So this rally that we have right now may have been signaled earlier by this relative extreme, but I wouldn't say it was a beautiful signal. So if any of you did not react on that, then don't worry about it. There usually is a much better signal than that. The Kansas City wheat is our next market, where we have a 21% change in commercials positions, 20% change in large speculators, making large speculators net short again. It has happened, I believe, in the past, but if we open the 5 year chart, yes, here we go. It becomes obvious that it has happened, and with this change, we have moved to a significant extreme, significant bullish extreme. If you look at the chart, whenever we had such an extreme in the market, that usually coincided with a bottom in the market. So this is a beautiful market right now. We should have our eyes on it, and not forget that whenever we were at such places in time, then usually that was a bottom. Moving on to large speculator COT Extreme, we've got the Japanese yen on top of a list with 118 report extreme in large speculators positions. Let's open that market first, and of course right away jump to the 5 years chart. Here we go. On the wider scale, on this 5 year chart, you may see that we are actually still closer to bullish extreme levels. In relative terms, we may talk about a bearish extreme, but generally speaking, on a wider time scale, we are still closer to bullish extreme levels. So this may push us even lower in price terms. But anyhow, don't forget the wider perspective, and that's still bullish to me, at least. Oats is our next market with 107 report extreme in large speculators, but a much greater extreme, 249 report extreme in commercials. Commercials have become net long, while of course large speculators are net short. So that is a unquestionable bullish COT extreme in the market, and I'm just showing you some examples in time when commercials were net long, and that really coincided with a huge bottom in prices. So again, a wonderful signal from Oats at the moment, a signal that we can act on again. And then last but not least, we've got the lean hogs with a 93 report extreme, both from commercials and large speculators at the same time. This is a very large extreme, Still a little bit away from all-time extreme levels if you look at the chart I'm showing you right now, but it is a in relative terms unquestionably large extreme. And if you look at the chart, we're not surprised at all to see such an extreme. And it's really another market to have your eyes on because it has great opportunities. So that was our last market for the review. Of course, there are a lot of other markets to analyze. You can do so at our COT charts page. But if you'd like to have more in-depth and detailed COT analysis, then of course this is the page you should be looking at. Of course, let's not forget that we do provide all the COT report types that are available at CFDC, the CIT, the TIF, and the disaggregated as also. You can look at futures and options data type, and of course do your historical analysis on much older reports. You can look at of course other markets as well, and of course a lot of other useful functions are also available at cotbase.com. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye bye.